I'm John Byrne with AML Right Source, and I'm very pleased today to be joined by Sarah Beth Felix. Um, Sarah has done our program before, kind enough to spend some time with us today. She has a bunch of things that she's involved in, but president of Palmero Consulting, co-founder of Acceleron Bank, also very, very active, to me in a positive way on social media, because whenever there's an enforcement action, consent order, or an announcement by the government, Sarah's got not only a quick take, but a very detailed and insightful take, and really appreciate her ability to give us in the AML community a heads up on some things. So first, Sarah, thank you for taking time today. Really appreciate it.
Thank you. Thank you. It's always fun to talk with you. I've been a longtime fan of yours since the beginning of my career. So I always say yes. Whenever you ask me, I'm like, yes, of course. Of course, I will chat with you.
Well, thanks. So the first thing is we're in June of 2025. So mid-year review of what's going on in the AML, financial crime, sanctions, CTF space. And obviously we have a change in administrations. We have change in the agencies. First question is sort of a broad overview from a practical day-to-day experience thus far. We'll talk about some specific enforcement actions a little bit, but thus far, how are your clients doing in terms of if they've been involved in an exam or any other issues so far in 2025?
Yeah, so very interesting. For the last, I would say, 3 weeks, so the last part of May, I've received several notes, emails from community bank and credit union clients that their regulators, some of them that had kind of shark-like AML exams and examiners the last several cycles, that those people have been magically moved off of their exam cycle, and that their length of their exam cycle has gone from 1 to 2 weeks on site to 1 or 2 days on site for the AML portion. Yes, and I think I I would like to say that I'm surprised by that, but I'm not surprised by that, because I think we saw very early on, both in the lack of consent orders that were being made public from the day of the inauguration, from that Friday of that week, till this time now in June. There's been only one consent order issued for a traditional financial institution, and all of the other regulatory agencies have been largely silent, with the exception of FINRA. FINRA is still out leading the charge, issuing penalties and AWCs. Like they're just giving them out for free at this point. But they are really the only ones that I'm able to draw out, any lessons learned, because the rest of them are just kind of silent.
Let's talk about that one consent order. What was the bank and what were some of the themes then? Then I'll go back and ask you about the environment again.
Yeah, so it was Quaint Oak Bank in Philly, I think, in Pennsylvania. And just timeline, just based off the consent order. If you read between the lines, while it was issued under this current administration, it squarely fits under the last administration, because the exam was performed in 23. The report of examination was issued in 24. And then all of a sudden they issued the consent order in 25. So I wouldn't be surprised if that bank has the majority of those things fixed at this point, because it looks like it's about 18 months out from almost 2 years from when this probably took place. So I don't really credit that to this administration. I think that still falls under the last administration. So I think this current administration still has a big fat goose egg when it comes to consent orders and enforcement actions. But I think what I'm hearing from banks, one of the most alarming things, is that boards and executives are now starting to pull back, because now it's like, oh, well, now they won't focus on this for the next 3 years. So let's take this person from fraud, this person from AML, and stick them over here in consumer compliance, because no one's really looking at this area. And I'm like, the risks don't go away. The dirty money doesn't stop. It's still there. And come the next administration, they'll still hold you accountable for what happened under this administration. So that I think is the more scarier part for me.
Yeah. And so to that point, the from a legal perspective, there are statutes of limitation. So we did a webinar, did a couple conversations on the state of anti-corruption, and given the pausing of the Foreign Corrupt Practices Act and some of the other things, some of the panelists that we talked to said, again, remember, FCPA, for example, has a 5-year statute of limitations, so things could come back. But the other part of this is we did a forum, and I believe you participated with us, that AML partnership forum that you've helped us in the past, back in March, and we did a panel discussion sort of about what I just asked you, like where are we environmentally in terms of AML oversight? And one of the panelists from a pretty large institution said, from his perspective, he does envision getting pressure from senior leaders, boards, as you just said, maybe to redo or pull back on resources. But he said, from his perspective, he's going to tell boards, we need to do the same blocking and tackling. We need to keep these resources strong. And as you and I both know, Sarah, because we're in this space for this reason, if we are proactive as a community, we can go after elder abuse and human trafficking. It's not a compliance checkbox. It's we can be helpful to society. So I realize that sounds naive in this day and age, but many of your colleagues and my colleagues that are in institutions completely believe that. So I think that that's something else that has to be considered. But I do share your concern that institutions, and let's face it, we have clients as well, may not have the same direction that they've had in the past. And only time will tell, like you say, if there's any additional actions by the various agencies here.
Yeah. Well, yeah, I mean, I kind of, seeing how this is moving, it kind of reminds me of what it's like when you have like a super lenient parent and then a super strict parent, right? You have the good cop and the bad cop. And so as soon as those kids are with the super lenient parent, then they just run wild, right? They run amok, but they still have accountability when that super strict parent comes in. And so that's how I see this playing out. And it's unfortunate because we can't really risk losing any more banks. I think the last stat I saw from FedFizz was 4,999 community banks. And a lot of them, and of course this is also under this administration, are getting the quick approval for being gobbled up by credit unions, and which bothers me. We don't need shrinking community bank population. We need that to be strengthened, and we just keep seeing it being chipped away. And if we look out over the next 3 to 4 years, I don't want to see that number continue to drop, especially when the new administration comes in and they hammer these banks, because these banks aren't being informed. The board and executive management is not being informed, like, hey, you have a human trafficking ring here. You have a drug trafficking ring here. And that AML officer doesn't have the resources. They may not have the knowledge to train their board to let them know. So then the board just kind of pulls back on the resources. And then in 3 to 4 years, they get hammered and they go under, they get gobbled up. And that's something that I'm really concerned about because we're already seeing such a shrinking population.
Even though it may be the last action we see in 2025, going back to that enforcement action, remind us again some of the high level themes from that particular case.
Well, they had issues with all 5 pillars, essentially. But I think the majority of it comes back to the lack of a threat mindset. And that's something I think that every bank, from the smallest bank to the largest banks, can benefit from having that threat mindset. And that's really thinking like a criminal. And if you read, like for me, when I was reading between the lines in the consent order, it was very clear that when the risk assessment was done, when the training was done, when the monitoring systems were set up, they weren't set up with that threat mindset, right? It was set up with checkbox, 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 which is what plagues our industry, as you know. So I think for them not having a properly performed threat assessment, not risk assessment, threat assessment, is something that would have benefited them. And I think out of a properly performed threat assessment comes the ability to have proper training and have the board be knowledgeable and also have proper monitoring, right? Have, the proper team, the proper technology comes out of that threat exercise. So yeah, that was I think for me, one of the biggest takeaways.
Right. One of the major announcements from this administration in the AML space was, I think it was back in February, The Treasury Secretary announced that under the umbrella of the Corporate Transparency Act, that there will no longer be enforcement against domestic entities versus foreign entities. And as you and I both know, it was a long, long process to get where we were before 2025 in terms of the debate on what was going to go into the corporate transparency registry, where was the beneficial ownership access going to be, what were the regulations going to be, and all of that was in response, in my opinion, to two things. One is a clear gap in coverage for beneficial ownership information that law enforcement needed so they could go after shell companies and all this illicit activity. And secondly, which was related, is way back in 2006, the U.S. in the mutual evaluation from FATF was actively and correctly criticized for not having those laws and regs. And obviously, back then in 2016, they were given largely compliant. I don't have it in front of me, but because they were moving along. And as we know now, the FATF evaluators are here because the next report is due in 2026. I'm not asking you so much to weigh in on what will FATF do, because I've seen some have said, oh, because it is kind of political, and I'm not being facetious, that the U.S. might be able to withstand an active criticism there. Others saying maybe not gray list, but certainly it'll be a knock on the infrastructure. Leaving all that aside, because that's something we're going to continue to debate. From your perspective, what's the practical impact of that major change in corporate transparency?
Yeah, I mean, for the day-to-day AML officer at a bank or credit union, there's really not a material impact per se in terms of something that changes for them. But the whole purpose of everything, why we do what we do, is to find suspicious activity, report it in a highly useful, timely manner to law enforcement partners. Those law enforcement partners were supposed to be able to get a peek behind the veil of secrecy that our onshore, offshore states allow, right? Like Wyoming, Nevada, the rest of them. And so if they are also the consumers of the SARS and now they don't have that peek behind the veil of secrecy, it's going to make their cases so much harder to work, which in turn affects whether or not an AML officer is giving useful information, right? So it does have an impact on that day-to-day work, not directly so, but really in the whole purpose of why we're doing everything, right? I mean, you've worked with enough AML officers over your years where we aren't doing this for fame, right? We aren't doing this for money. We are doing this because we believe that communities need to be safer. We need to find the traffickers, right? We need to report them and get them behind bars. Well, we have essentially gutted the ability for law enforcement to do that when we shuttered the CTA. So now, since it's only for foreign corporations, supposedly, I mean, it's not final yet, but for foreign corporations, because our onshore, offshore states allow foreign people, there are hardly any IP blocks. Even our sanctioned countries, several Secretary of State sites allow people from those sanctioned country sites to go online and set up a business in their onshore, offshore state. And so now those people have now circumvented the foreign registration requirement. So only the legitimate foreign businesses will actually be the ones that will be complying with the CTA, not the illicit front companies that were set up offshore in sanctioned countries that now are domestic. So
Amazing. Yeah, it's amazing. I saw something just today. The FACT Coalition, which includes Transparency International, Global Financial Integrity, they came out with a major statement, and a number of academics and others talking about the downside of what they've done with CTA, which they've said earlier, but some report just came out today, which I hadn't had a chance to look at. But anyway, I do think it's going to bear watching, and I am very curious to see what the oversight and also the downside in terms of criminal activity. I think that's going to be fascinating to watch. So a couple of things now related to regulatory oversight. We have either acting or new people in roles at the federal banking agencies. And two issues I want to ask you about. One is both the agencies have indicated, and there is actually legislation, at least on the Senate side, might be on the House side as well, to ensure that reputation risk is no longer a factor in exam oversight. So people can speculate who haven't been involved as we have that, oh, reputation, that sounds so subjective. And so you need to have things that are factual, what have you. Give us your take on what reputation risk meant prior to this, and what you think this could mean going forward from a practical standpoint. What's your take? And you're involved in a bank yourself,
Mhm.
so obviously it's relevant to you from a day-to-day basis.
Yeah, I have to say I have mixed feelings. And I think I mentioned this in March that I don't think I've written a letter to government like dear White House or dear Senator XYZ since I was in grade school. But I've written now since this current administration, I've written 3 letters. One of them was to Senator Tim Scott about the Firm Act, which is about reputational risk, about removing that.
Yep.
And in the letter, I wrote that I understood where they were coming from because they were talking about some biased, things. And to me, this tied back to that report that I posted about the weaponization. Remember that subcommittee report that I wholeheartedly, not whole, but almost wholeheartedly disagreed with almost everything in that report, and I posted about it.
Right.
So while I see this very much related to that, it begs the question that uh, what what is something that is high risk reputationally? And if that's not defined, then we will have adult content with CSAM as low risk, right? Somebody has to say this is high risk reputationally. And I feel like they're also, oh, well, we don't want reputation risk from the right side, the conservative side. So we're going to pull back on this. And I'm like, all right, well, if you pull back on this, then it's also going to pull back on all these other sides too. So I struggle with that. But what I wrote in the letter to Senator Scott was, this is great on paper, but how will examiners operationalize this? Because I've been in exams and I've been with clients, I've been the subject of an exam where they come in with their own bias of what is high risk to them, what is reputationally high risk to them. And if we don't set a standard, right, and at least define it, not that we say this category and that person and this person is high risk, but we need to at least set a standard of what are indicators of high risk reputationally and train examiners on it, because I feel like now we're just saying nothing poses a reputational risk, which means that everyone can bank everyone and you can't ever say no, and we don't want that either.
Right.
So, I don't know. I mean, I it's just kind of like I have one conversation on one side of my head, and then on the other side of my head, I'm like, "But that doesn't make sense." So I think there's a bright side and a dark side. I think the dark side wins on this one.
Yeah, and I agree with you that it's hard to quantify, and we've all said, we meaning the AML community, that we felt that our public sector partners, regulators needed, I don't want to say better training, but more focused training in the AML space. So we've talked about that constantly.
Yeah.
That was part of the AML Act as well. But this is a little different, and I think this is one where we're not going to see the impact for a bit. And when we do, it might be hard to turn that spigot off. So,
That's
so again,
exactly right.
we'll see. So that
Yeah.
leads me to the adjacent issue, and that's, I'm still calling it de-risking.
Mm,
Others call it debanking, which drives me nuts because that's done intentionally. People do this all the time. They create words that they know are going to resonate, right?
mm,
And de-risking always meant to me there was a risk decision made, and that decision caused the institution to either not on board or to exit a relationship. Debanking sounds simplistic,
mhm.
that, oh, we're simply not giving you access to financial services, which is an age-old debate, by the way. We know, and you and I think have talked about this previously, especially with humanitarian groups and
Yeah.
charities and all that. But this came about in large part because of going back to weaponization
Mhm.
umbrella, saying that financial institutions were making decisions not to bank gun dealers, not to bank crypto companies, and others, saying this was, I talked to somebody who said this is Operation Choke Point 5.0, which is so hyperbolic to
Yeah.
not worthy of a response. But I do remember, my long ago when I worked for American Bankers Association, one of the things the bankers would always say when they were trying to say everybody should have account access. It was never a disagreement, but it was, okay, we should figure out how to do that. But banks are not a utility. So you don't automatically get an account. You have to show the reason, that your whatever risk you have can be mitigated, can be absorbed. I mean, you do it all the time with credit and loans and all that kind of stuff. So, and there's obviously now been legislation. The Senate and House Financial Services and Banking Committees have talked about this. What's your take? And obviously, like I said, this year it's about gun dealers and crypto, and before it was about others. You could say
NGOs, and before that, it was foreign financial institutions, right?
county banking.
Yeah.
And
uh-huh.
yeah.
Yeah.
So, what's your take on where we are with all this mid-year?
Yeah. Well, I am hopeful because while I agree with your comments on the de-risking versus debanking, one of the reasons why we started down this path of starting this bank years and years ago was to help solve that de-risking crisis. It was unfair that banks in the US were looking at small banks, especially in island nations, saying, you're high risk, when they had been complying with beneficial ownership for a decade longer than the US, right? That really got to me. And so we started down this path, and over time, right, we've had to change our business plan where now we only bank domestic banks and credit unions. But that de-risking that has happened in an unfair sense, I now, fast forward years later, I've been in these meetings with my crypto clients, with my fintech clients, talking to their bank partners, and their bank partners are telling them, well, my regulator is pressuring me. I can't bank you. I have to de-risk you. And from my time with Special Operations Command down at McDill as part of the public-private partnership, I was always told, we want eyes on the money. Let's keep the eyes on the money, because as soon as we cut them off from the banking world, then it goes underground. And I think that kind of statement and approach can be applied across the board, whether it's a gun dealer, whether it's an NGO, whether it's a crypto company. We want that money in the traditional financial system. So I feel like the Operation Choke Point 2.0, or whatever they called, I have been in those meetings, and it is real. And it's unfair because it's based off of a feeling of the examiner, so it varies by examiner. And that's unfair. I mean, how are we supposed to have innovative financial solutions when FinTech A is under this regulator, that examiner is fine with it, but FinTech B is under a different regulator, that examiner sees it too risky, and then they have to be cut off? I mean, it just doesn't make sense to me. And I think that's part of the issue, especially when they start rolling back the reputational stuff. We need guidelines. Like we have to have something, or else the de-risking is going to continue happening. Or the dark side of this is everyone can have every account, and that's not fair either, or safe. So I'm hopeful that it'll kind of right size itself, if you will. But with regulators being focused on just kind of like letting everyone have access to everything, it's like you said, it's going to take a couple of years, but the nasty, ugly side of this is going to be there, and I don't want to be here for it.
Yeah, I mean, look, it's got to be risk related, right? And the risks have to be documented risks. And so it's not just we don't feel comfortable. That should never be the case.
Yeah.
But if you don't feel comfortable based on your inability to mitigate the risk, that's one issue. But then you're right, the regulators need, and that's what we've said for years about charities. And they would tell us, we're not telling client or your banks not to bank, but we're telling them be careful, because there's examples where they've been fronts for terrorist activity and all those sorts of things, which are true. But they never gave enough notice. But I got to say, to be fair, the regulators did issue a number of statements. It didn't really change a ton, but it did issue some statements saying that not all charities are high risk, and a whole sorts of other things that you could look at. So they did try. They made some
Yeah.
adjustments to the manual, but it would unfortunately wasn't enough because of what you said, and that
Yeah.
is that if an examiner discounts what the agency has told them to consider, or have the banks consider, then you need some oversight over that examiner's
Yeah.
conversation with you, which caused this issue, right?
Yeah, and it's the same thing with the private ATM owners, right? Remember a couple years ago, there was some hearing. I think we had messaged back and forth about it because I was like, "What is this guy saying?" And I forget who the congressman was who was talking, and he was talking about how private ATM owners aren't high risk, just kind of like flat across the board.
Wrong apple pie is what I said.
Right. Yeah.
Which is laughable, by the way. But anyway,
I know. I was like, wait. They're completely unregulated. Like, we do not regulate them from an AML perspective in the US. And then you're sitting there saying they're low risk and everyone should bank all of them. And that's the dangerous part, is that not, and to me, it comes down to that threat mindset. Does that institution have the right mindset, the right technology, the right people to handle that risk? And if they can, then great, then bank them. And those regulators have to trust. And those regulators also have to have a threat mindset. And that's what they're missing. They're very checkbox, right? Checkbox, high risk, checkbox, high risk.
Yeah.
And we need to move past that.
100% agree. Last topic, and I know we could take a lot of time on this, so I'm not going to pin you down to do that, but let's talk about crypto. You said you got some crypto clients, obviously a lot going on, to say the least. There's been a sea change in views on crypto from this administration, from the last, not making a judgment one way or the other, but it's there and something to be considered. Legislation is being considered in the Senate. Some believe it's not remotely strong enough. Just give us your 10,000-foot level. And again, I know you have clients, but in terms of your compliance expertise, what's needed? Where are we? And what do you think the odds are that we get
Yeah.
some of this going forward?
Well, to me, we're definitely cart before horse. I mean, the cart is like 100 yards in front of the horse at this point. And, while yes, we do regulate crypto, we've got that guidance from FinCEN, but, we're taking money that you can't touch and we're shoving it into, 30-year-old money service business regulations, which already, didn't work. I mean, for me, I was hoping when it was first published years ago that it was temporary. And then we would have, framework guidance that was specifically for non-fiat. And it never got updated. And so that to me is the biggest risk, that we don't have the right foundational approach to non-fiat value systems. And we have a lot of holes, even in that existing guidance that came out from FinCEN. What was that, 11 years ago or whatever? Even in that stuff, it's still like the fact that we don't regulate self-custodied wallets and things like that, right? That is a deviation from most other peer nations. So I feel like that needs to be fixed first before we have federal banking agencies that come out and say, yeah, banks, you should bank these, because these banks already are not equipped enough to bank fiat fintechs, right? Or private ATM owners or charities, right? Like, they're already struggling with that, getting it right, doing it in an efficient and effective manner. And then we have heads of these agencies coming out and saying crypto is good to go. And I'm like, no, it's not good to go. We need to fix this. So, and there's another huge issue with this, and I've talked about it for a while. We don't have enough examiners to examine non-banks. Like, they are on a 3-year cycle. So we see these cash to crypto companies pop up all over the US. They pop up, they run money for 2 to 3 years before they even get examined. And these banks go, oh, yeah, well, they're registered as an MSB with FinCEN. Therefore, somebody's examining them. That's a reasonable type of assumption that bank is having over their cash to crypto partner. But that's not the case, because we haven't staffed it correctly. I mean, it's just like, to me, we have so many other things that we should be focusing on before we come out and say, hey, community banks and credit unions, get in on the crypto game. To me, that's just a recipe for disaster in the future, in the near future.
We're not going to morph over to marijuana related businesses, but I do remember when, and it's still a challenge that if a large bank either exited or decided not to do it as a community bank would take that business or another type of business. And I remember regulators saying on panels, at least, and for the community bank, be careful. You just may not have the ability to manage, but yours is a larger point. Be careful. There's not enough examiner oversight. And let's face it, even with traditional banks, earlier this year, there were, I think that I could be wrong on the number, but I thought there was like either 2,000 or 200, and I know it's a totally different number, of examiners that were ready to be hired at the FDIC. Hiring freeze done, didn't happen. It's more of an issue with the non-banks, as you know better than anybody. So one of the other issues is if we don't get enough examiners that are qualified, and that's going to be hard, and if we don't have frequent, whatever the definition is, of exams, that's going to be hard. And let's face it, not asking you to comment on this part, but if you're just getting out of college, you think you're going into government right now? I'm not so sure. So
Yeah.
I think this is something we're going to have to navigate for many, many years to come. Final question, get you out of here. Again, I appreciate all this time and all the work you've been doing for a long time, educating all of us on everything. Uh, what's your high level prediction for the next 6 to 12 months? Obviously, none of us knows
Yeah.
in a regulatory standpoint, but what are some of the things you're watching particularly?
Um, I am cautiously optimistic that the crickets that we've heard across the consent order landscape, they will start chirping again. Maybe not in the volume that we've had the last 2+ years, but FDIC today published a whole bunch of consent orders, but more terminations than they did consent orders, of course. But there was one related to AML that was published today.
Okay.
And so I feel like that is an indication that maybe we'll start to get one or two here and there. But I think the main thing that banks need to focus on, and I think the main thing for the next 6 to 8 months, is going to be FTOs and SDGTs. And that's going to be the focus. And I say that with hopeful confidence because this administration keeps talking about how that's their priority. So I'm hoping that we will see some proof in that pudding. And so that is my hopeful prediction. You do not want to hear my not hopeful prediction.
Sarah Beth, thank you so much. Plug your podcast.
Oh, Fin Crime Unfiltered. It's on all the channels. The video portion is on YouTube. It's in partnership with Illicit Edge, and it's every Friday. And I basically talk about, cases that were cool, things that you can operationalize, go run data, go run rules through your system to see what your threat is related to these cases and stuff like that. So I try to keep it highly operational with a lot of takeaways and a little bit of snark, a lot of snark.
Nothing wrong with snark. Folks, those of you that don't already, you should follow Sarah Beth on LinkedIn, and obviously watch and listen to her podcast as well. Again, thank you so much. Really appreciate it. Stay safe out there. I'll talk to you soon.
Thank you.